Greetings, friends. Welcome back to Book Club. Buffett's Buffet talks about the best investments philosophies of Mr. Buffett. This is from the book Seven Secrets to Investing Like Warren Buffett. This book is written by Mary Buffett and Sean Shah. We are in our eighth episode of this series. Till now, we have covered 7 secrets to investing and the habit section. In habit section, what we have covered: power of habits, watch your spending, find a job you love or find love in your job, avoid debt, risk management, health, and continuous improvements. There are 7 sub-chapters of section habits. Now, today we'll be discussing about value investing. Very important and new concept probably for most of you. Definition of value investing is, in layman terms, okay, investing in the stocks and shares where the existence and growth is assured. For example, Hindustan Unilever Limited consumer goods section are for some are for sure consumed, irrespective of technology upgradation or whatever is happening. We use toothpaste, toothbrush, hair oil, food. These are some of the basic things which will continue to have it irrespective of whether the other aspects are there or not. So Hindustan Unilever Limited, investing in Hindustan Unilever is an example of value investing. And Warren Buffett insists on value investing. Then you may be asking, if it is value investing, what is the other side? Other side is called growth investing, as well as venture investing also is there. Venture capital investing. Venture capital investing is very high risky, whereas growth investing is in between. I'll tell you what exactly is growth investing. Whereas on the contrary, growth investing is to focus on growth and immediate fructification of the investment what you have made. Some of the examples we'll talk about growth investments. In 1980s, Reliance Industries Limited was a growth investment. Now it is value investment. 1990s, if you look at it, TCS, Wipro, Infosys, okay, these are example of growth stocks. Now these are example of value stocks. 2000s, if you see, HDFC Bank, ICICI, Airtel are some of the examples of value investing, growth investing in 2000s. Okay, in 2010, Adani has been the growth investment. After some years, some growth stocks may turn into value stocks. Value stocks sustain, but all growth stocks may not sustain. Okay. So with this introduction, let us get into what Warren Buffett's value investing is all about. Do you know someone who has a huge collection of stamps? He brings the analogy of stamp collection with value investing. Stamps you collect when you feel those stamps are very rare and it has the value. So you associate value with that stamp. So that is the reason why you collect it. Do you know someone who has a huge collection of stamps, or someone who loves to collect baseball cards? Imagine instead of stamps or cards, what you have is a collection of most profitable businesses in the world. This is what value investing is all about. Warren has some of the most profitable businesses such as Coca-Cola, Kraft Foods, and American Express in his investment portfolio. Pause for a moment and imagine. Each time someone buys a soft drink from Coca-Cola, a snack from Kraft Foods, or uses a card from American Express, you become richer. Just a quick fact about 1.9 billion Coca-Colas are sold in a single day. That is 79 million cans of Coke every hour, which is equivalent to 1.3 million cans per minute, 21,990 cans per second. 1 second, 2 seconds, 3 seconds. How many cans would have been sold? That is about 65,000 cans of Coke sold. And if you own the Coca-Cola company, you will be 65,000 cans of Coke richer every 3 seconds. That is the idea of investing. To buy and own profitable businesses is called value investing. And in the stock market, you can own these businesses by buying their shares. Okay, so this is called just the collection, hobby of stamp and card collection. Okay. And in the stock market, you can own those businesses by buying their shares. What about value? Value stands for buying a good business at a good price. Buying a good business at a good price. You may be wondering why some people who have bought shares of profitable businesses do not make money from the stock market. The explanation is simple. They bought it at overpriced. They bought it at an overvalued price. Buying, giving the right price for the right value is what value investing is. That is why it is so critical to learn the value investing, which advocates buying good and profitable business at sensible prices, not at exorbitant prices. And by practicing value investing, you will gradually master the secret to building lasting wealth. Okay. Definition of value is buying good business at good price. Value investing is the secret to the lasting wealth. So the moment you start investing in value investing, so you will be having the wealth which is lasting for a longer time. Now, today we will also discuss about origins of value investing. Security analysis by Benjamin Graham and David Dodd from Columbia Business School. We'll discuss in a while. Mary and I, here I means another author, Sean, acknowledge the origins of value investing as we induct you into the value investing community. To understand value investing and how it has impacted lives, let us go back to the first half of the 20th century. In 1934, two finance professors from Columbia Business School, Benjamin Graham and David Dodd, published a book called Security Analysis, which became the guidebook for successful brokers and investors. The Security Analysis book was also part of our MBA Finance, which is very interesting book. If any one of you wants to read it, please go through it. So we can also discuss in our future book reading also. Before Security Analysis was published, people who invested in the stock market were guided largely by speculation. Even today also, most of the people keep talking about the speculation and what they believed to be insider information. You guys know so many people got arrested because of insider information. Okay, some of the famous people. So, but Warren Buffett never got into such kind of controversy because he always believed in value investing. Okay, it is a similar kind of thing. I mean, you know, what we are going through right now. Benjamin Graham believed that by studying and analyzing the market, he would be able to determine a stock real price, and then we purchased it. He would be doing so as a knowledgeable professor rather than a mere speculator. Two different things. The person who knows the value investing, he will be doing it as a knowledgeable person than a speculator. He worked with the David Dodd to develop value investing, a strategy that is used to identify and buy stocks below their value, which is undervalued. That means even today in our market, there are some value stocks which can be bought at lower price than lower price. The same value stocks, if you buy at lower price, it will not be the value investing anymore. Graham began teaching this method of value investing at Columbia Business School in 1928 and continued to improve his skills over time. Some of the legendary businessmen who attended his class were Warren Buffett. Warren Buffett attended his, Benjamin Graham session in 1951. Mario Gabelli is another investor like Warren Buffett. He attended in 67. Glenn Greenberg attended in 73. Charles Royce attended in 63. Walter Schloss attended in 78, and John Shapiro in 78. In the coming chapters, we will discuss some of these great investors and how we can learn from them. We will be discussing from Indian perspective also. In 1992, Tweedy Brown Company LLC published What Has Worked in Investing, Studies and Investment Approaches and Characteristics Associated with Exceptional Results. The company's analysis examined the concept of value in different markets and in various scenarios over time and concluded that value investing always produced remarkable returns. Each of us has only a few decades in which to invest. So we need to follow a proven method in order to make our money grow. The rest of this book will explain how to use value investing to make your own money grow. And with this, our authors are welcoming us to the value investing community. So one of the main takeaway from this particular episode is speculation versus specialization. What has worked in investing, published by Tweedy and Brown Company in 1992, is another guidebook which we can take it apart from security analysis. Okay. Thank you so much. And in coming episode, which we'll be talking about stock ideas. In stock ideas, very interesting part is start finding the stock investments, how we'll be finding those stock investments. Very nice anecdote. He says, I look for the stocks in the Mall Street than the Wall Street, is Warren Buffett's famous quote. Okay, stay tuned. Subscribe this channel, press the bell icon so that you will be getting the continuous updates. Thank you so much.